Snap, the social media company, is scheduled to report quarterly financial results after the markets close on Tuesday, February 4th, 2025. That has investors asking if they should buy this stock before the company announces earnings. I'll answer that question in this video. I'll also share with you my preview for what you should look out for from Snap in the upcoming earnings release, and then look at its valuation on a forward PE basis and share with you my discounted cash flow valuation model for Snap before I answer the question if you should buy this stock before earnings. Let's take a look. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so the first thing that investors should look for from Snap is the quarterly revenue number in the latest quarter. They delivered 15% year-over-year increase in revenue. And while that's a solid number in and of itself, if you compare with the rivals like Pinterest, Meta Platforms, Alphabet, and other ad-related businesses, this was one of the slower growth rates among those competitors. The advertising industry was robust in the third quarter of 2024, and I suspect the fourth quarter will be the same. So I think revenue growth will be solid for Snap. The question will be, will it be as much as or less than its rivals? The average revenue per user is another important metric to look for. Snap is adding millions of new users, but the problem is that they're adding millions of new users in parts of the world where those users do not generate as much of an average revenue per user. Advertisers, as you might understand, are more interested in spending money on getting the attention of people that have more disposable income. An advertiser is not going to pay $100 to get the attention of somebody who doesn't have $100 to spend. And so it matters where the user growth is coming from. And for Snap, the trouble has been it hasn't been growing in North America, where the most valuable social media users are. Reddit is doing a much better job in growing monthly active users from North America. Meta Platforms is doing a much better job. Even Pinterest is doing not very much better, but still better than what Snap is doing in growth from North America. Snap also is doing a great job increasing its cash flow. 116 million operating cash flow. That's up almost 10x from the 13 million in the same time last year. Similarly, free cash flow of 72 million compared to negative 61 million in the same time the prior year. All right, so another important thing to look for is the monthly active user number. The company reported 443 million daily active users, which was up by 11 million from the previous quarter. But as I highlighted, there's been zero growth from North America. In fact, there's been declines. They used to have 101 million. Now it's down to 100 million users from North America. If Snap reports growth in this segment, for instance, if they report monthly active users, average daily active users from North America of 102 or 103 million, that could send this stock price up by 5-10% just on the back of that news, just because it's been so many quarters of no growth or declines in that most important region. So that's one little detail that you might overlook that makes a huge difference for this investment, because it could signal that the company has found a way to add new users in North America, which would provide huge upside for Snap stock investors. Of course, the total number of average daily active users, if they report growth of 10 million or more, would be a good number. That's the last 2 quarters, they've been delivering accelerating growth. What I mean by that is they grew daily active users of 8 million from Q4 to Q1, then 10 million from Q1 to Q2, then 11 million from Q2 to Q3. So if they grow 12 million or more, that would also be something that could send the stock price higher by 5, 10, 15%, because that would indicate a growing trend where the company is adding, not only adding daily active users, but adding them at an increasing rate, the second derivative, right, which I've talked a lot about on this channel how important that second derivative is. When you increase the rate of increase, that also adds enthusiasm for an investment. All right, looking at valuation, Snap, its share price has underperformed in the last year, falling from around $18 a share all the way down to $11 a share. Of course, I'm disappointed about that. I've had Snap stock rated as a buy all year long in 2024. And up until this point in 2025, I've also had the stock rated as a buy. So its underperformance is especially disappointing for me. The stock remains cheap. In fact, it's cheaper than it's ever been. It's trading at a forward price to earnings of 17.4, which is understandable on one hand because of its failure to deliver growth in North America when some of its rivals are growing in North America. So that's one big question mark surrounding Snap. Another big question mark is management. This is one of those companies where the business model is very lucrative, the actual business is very lucrative, but the management's handling of the business has not been excellent. You've heard me talk a lot about excellent management teams. These are, the management team of Amazon, the management team of Palantir, the management team of Apple, of Nvidia, of Alphabet. These are excellent management teams. Actually, I should remove Alphabet from the excellent tier. They might be really good, but I don't know if I'll put them up there in the excellent tier. But Snap's management team, I wouldn't rate them anywhere near those excellent businesses. I would be reluctant to even call them a good management team. The actions I've seen this management team take sometimes makes me scratch my head as to why they're making this move or why they're making this decision. And so the business itself is very lucrative. The valuation is very attractive. The industry is growing and will likely continue to grow. It's a massive industry, the advertising industry, the social media industry. The company has all of those factors working for it. If the management team can improve its performance, it can unlock a lot of value for this company. Similarly, when I conducted a discounted cash flow valuation for Snap, I found its intrinsic value around $24 a share. And again, the current market price around 11 would suggest a significant undervaluation for Snap stock. As I highlighted, I've had the stock rated as a buy all year long, and I'm reiterating that buy recommendation here. I still think the stock is an excellent buy. Should you buy before or after earnings? This is one of those investments that's going to be volatile surrounding the earnings release. As I highlighted, there was a few items there that could send the stock price higher by 5, 10, or 15% on its own. Should those factors all work together and the company deliver positive on each of those factors, the price could be up by 20, 30, 40% for Snap. I've seen that happen multiple times for this company. The same is true on the downside, but although less severe. Since the company is already so undervalued, I think the downside, while it remains still a risk, is less of a risk than the upside. This is one of those few situations where I would say the risk is more to the upside than to the downside. So, you know how I typically say, buy half of your allocation before earnings and half after earnings? This is one of those situations where I would weigh my purchase more before earnings, maybe 75% before earnings and 25% after earnings. Nevertheless, I think the stock is a buy. I think the price is attractive, even though risks remain. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.